Hello investors and traders. This video will explain No Sure Thing KST from Martin Pring. More importantly, how you use this technical indicator in your investing or trading strategy. It is about learning how to put rules together to formulate a rule-based system. Some questions we will answer today is, what is KST? How to use No Sure Thing oscillator? What are our rules to trade KST? We have a specific strategy which this video will go over. So before we get started, you know the catchphrase: study it, analyze it, adapt it. What is KST? The No Sure Thing. The No Sure Thing KST is a momentum oscillator developed by Martin Pring to make rate of change readings easier for traders to interpret. A rate of change ROC indicator is the foundation of KST indicator. KST indicator is useful to identify major stock market cycle junctures because its formula is weighted to be more greatly influenced by longer and more dominant time spans in order to better reflect the primary swings of the stock market cycle. The concept behind the oscillator is that price trends are determined by interaction of many different time cycles and that important trend reversals take place when a number of price trends are simultaneously changing directions. The No Sure Thing KST is a momentum oscillator intended to interpret rate of change price data. Trading signals are generated when the KST crosses over signal line, but traders also look for overbought and oversold conditions. Traders also combine the KST with other indicators to maximize their odds of successful trade. KSI emulates the MACD indicator because it bases itself off momentum. So every time it crosses a specific, it could indicate a bearish or bullish move. How to use No Sure Thing oscillator. The easiest way we analyze and understand the KST is in steps. Our overall strategy is we become overbought or oversold, then a crossover followed by crossing of zero. Step 1. Are we overbought or oversold? The KST compares the prices over a period of time. The indicator fluctuates above or below zero, moving into positive or negative territory. A period refers to the number of price bars the indicator will include in its calculation. The price bars can be 1 minute, 5 minute, daily, weekly, monthly, or any time frame you have accessibility on your charts. The longer period chosen, the more bars in the calculation, the less often the indicator will move outside the minus or plus 100. Short-term traders prefer a shorter period, fewer price bars in calculation since it provides more signals, while longer-term traders and investors prefer a longer period. Using a daily or weekly chart is recommended for long-term traders, while short-term traders can apply the indicator to an hourly chart or even a 1-minute chart. KST is an unbound indicator, meaning it can go higher or lower indefinitely. More volatile markets will have a greater threshold. It is not uncommon for stocks to have a threshold at plus or minus 200 or even higher. For this reason, overbought and oversold levels are typically determined for each individual asset by looking at historical extreme KST levels where the price reversed from. Oversold or overbought levels can be yearly, monthly, or daily, depending on what type of investor you are. Okay, let's go to the chart for overbought and oversold. First, let's start with the idea. I would not short into a trending stock or if the overall market is going higher. So my first recommendation is, what is the macro doing? Is the macro going up higher? On the overall market, the macro has been going up higher a lot for years now. So shorting into the market is very difficult. I would throw out all the shorts because the market is continuing higher. The stock also looks like it's heading up higher. So I would use the KST for oversold regions. This is an unbound indicator. So remember, these values could be higher than the minus 100, higher than the minus 175, the higher than 200. Look at extremes, levels that has never happened before on the oversold. These extremes could possibly lead to a major uptrend when you learn rule 2 and 3. So first, let's look at the extreme. This number is at extreme. Without even knowing rule 1 and 2, it goes up. But let's look at some of the non-extremes, a yearly high or a recent high, which again has shown very positive on the oversold. So remember, look at the levels and you will see when it becomes oversold, it is get ready to buy. 2. KST Crossover. KST triggers technical signals when it crosses above to buy or below to sell its signal line. The speed of crossovers is also taken as a signal of a market is overbought or oversold. KST helps investors understand whether the bullish or bearish movement in the price is strengthening or weakening. You are looking for a crossing point of the KST with its actual trigger line. When the KST crosses down below its trigger line, that is considered to point where indicator is considered overbought and could possibly indicate a short position or could sell your current position. Vice versa, if the indicator crosses above its trigger line, this is a point where it could be a turning point to the upside where you could possibly buy and go long. A lot of traders only use the KST for reversals and especially for major reversals. A lot of traders also use it for day trading. As we mentioned before, you look at oversold levels. Here are the oversold levels. Now, when the two lines cross, it is an opportunity to buy. So the oversold levels gives you a warning. Should we buy? When should we buy? And then when it crosses the line, we're off to the races. Let's look back here. COVID-19 days. Down, 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 down. No crossing, crossing right here, and then off to the races. And again, if you wanted a re-entry buy, crossing, going up to the races. The next rule, we're going to go over the zero line. 3. Further confirmation zero line crossovers. On the KST high to low with a zero being the middle ground, once the KST crosses above the zero line, it is further confirmation buy signal. When crosses below the zero line, is a further confirmation sell signal. Once your typical price or your asset crosses over that longer term moving average of the typical price, these are the areas you will be hitting the zero line on the KST indicator. So as we cross below the zero line, the typical price is crossing below the longer term moving average of the typical price, giving us a bearish entry as the KST crosses above. That is our typical price of the asset exceeding the moving average, giving us our bullish entry for the KST. So crosses over zero, is a further bullish sign. Crosses under 0 is a further bearish sign. KST above 0 indicates a price is above the historic average. When trading below the 0, the current price above its historical average. KST is below 0, the current price is below its historical average. Also, low readings below minus 100 and indicate the trend has been to the downside. Readings above plus 100 and above indicate there has been a trend to the upside. Based on this information, an emerging bullish trend would be going from negative or near 0 readings to 100 can be used as a signal to watch for an uptrend. Move from below 0 to plus 100 is getting ready to move higher. A pullback to 0 level can be a buying opportunity. When the stock is moving to the upside is when to get in. KST is very helpful. Confirming a bullish trend during a strong uptrend, the KST will typically remain above the plus 100 level and above. Staying at higher levels may confirm the strong trend as long as the KST remains above 100. Just a key point, remember, extreme peaks could lead to a pullback or a change of trend. Extreme peaks. Just as easy as you can make money on the long position, we can use the KST for shorting the asset and identifying emerging bearish trends. Going from positive or near 0 readings to minus 100 and lower may indicate an emerging downtrend. Moves from 0 to below minus 100 is a signal for a downtrend. Once this occurs, a short-term rally may provide shorting opportunities. Confirming a bearish trend in a strong downtrend, the KST will typically be around below minus 100 level. Again, let's go back to the chart. Oversold. Crossing point. The next thing is when it crosses above 0. When it crosses above 0, it's again a further confirmation that we are off to the races. Now, the rule is if it stays above the 0 line, it's a positive sign. But again, this did not go that low, went back above and showing positive movements. So the way we see it is the major move, Pring really nailed it. The KST really moved well. Now, if you take the rule when it was falling below the 0 line, at least some of the positions should have been out. Of course, we are on a macro bullish trend where it's going up. We feel that the KST can really predict the bottoms of a major move, where sometimes the gyrations, it will not always get correct. But using a weight of evidence could possibly help you with other indicators. KST divergences. Divergences is when peaks in a price action are not confirmed by the KST. Bullish divergence is when the stock is making new lows, but KST does not. Bearish diversion occurs if the stock is making new highs while KST is not. Price is going one way, but KST is going another way. The theory in this case is the price ultimately resumes in the direction of the KST. In the case of divergence that we have here, the price was falling lower, but the KST was not. Key takeaways. The KST works in a variety of markets. The KST is a powerful indicator, but the KST should not be used as a standalone indicator, but coupled with other indicators to use a weight of evidence. One indicator does not make a successful system. Please watch the other videos, top-down strategy, my investment strategy, CCCI indicator, etc., to combine these indicators to make a rule-based strategy. You know the catchphrase. Study it, analyze it, adapt it. Peace.